Okay, so as promised, let's go through the trade of the day. Let's get these executions up. Now we can see where my actual markers were. Let's do now a little bit of analysis. Just go over this real quick. Honestly, didn't take this loss too well, I'm not gonna lie. Was kind of pissed. But let's talk about it. So, firstly, delivering out of this demand zone. So that was my first point of action in terms of where I wanted to see price go. I wanted this delivery upwards. Yeah, I just wanted to see delivery this way, back towards these highs, back towards Asia highs. So in terms of my actual confluence, we had the retest of the VWAP. If I'm going to get rid of some stuff so we can make this a bit clearer, because there's a lot of stuff in the way here. Just gonna hide this for now. Okay, so you have Asia highs, London highs. We have the retest of the VWAP, the blue line here. We came down. The VWAP aligned with midnight open, and considering we just shifted structure to the upside with this break here, I wanted to see a continuation from these lows. And unfortunately, I got stopped out just below here pretty quickly as well. Normally, from personal experience, if the position starts and you're in the negative, chances are you're going to get cooked. And I got cooked. It's completely fine. We hit the max loss limit for the day, which is 250. And it's cool. It's completely fine. Okay, so moving over to Bookmap, I was looking for an area within my OTE which had a significant amount of passive buyers resting there, sitting in this line here. I wanted to use this as the context. I had this red line as we were coming down. So yeah, we had this line coming here of the passive buyers. I wanted to see a reaction off of it. However, I didn't wait for the absorption of the sellers. So they completely blew past this level. CVD was trending lower. So I missed out on the absorption on this trade. I needed the CVD divergence. And also, the other thing I did wrong was I want to take trades off the value areas, meaning these areas here. So I did not wait for the close there. I kind of just dived into this because I saw this conviction before. I play these setups up quite often, like this. And I have a pretty high win rate with them, but, you know, it happens. It was probably like a B setup, which obviously tells you it's not the best. However, yeah, the idea just wasn't perfect. And as you can see, I lost. I'm not going to sit here and pretend I won. We did not win. But it's okay. It's all part of the game. We just got to roll with the flow. I'm going to do some testing, and we're going to go from there. In terms of what I actually use for my strategy, I'm just going to go over it really quickly and talk about it. Okay, so this is what I use pretty much. Standard deviation and OTE, right? So what is OTE like as a thing? Okay, well, firstly, it stands for optimal trade entry, and it's the area in which price is considered most discounted in a leg of price. So what do I mean by that? As you can see in this example here, we have a move up. We close above these previous highs, which tells us the price wants to continue upwards and buyers are accepting higher prices. Okay, so what do we do from there? We anchor our Fibonacci, our retracement tool, from the low to the high, which broke this leg, in order to continue in the most discounted area of price that the buyers are willing to buy at. Okay, so we want to catch the low of the move and ride it back to the highs and catch the continuation pretty much. Okay. However, you can't just do it like at any point. You really need to consider the context and the narrative, which is something I missed out on today. You know, no one's perfect, and I missed out on this today. If you consider the state which the world is in terms of with how Trump is dealing with things and the fact that the US-Iran war can start, should I have based my narrative on being bearish and look for bearish setups? Possibly, very possibly. So yeah, you have to consider the context and the narrative. Because as you can see, if you don't, there's a very high chance that your thesis of your trade is going to just get absolutely ran through. And if anything, my trade today is a great example of that, right? So my thesis was wrong. I was just wrong. Simple as that. And I aligned my time frames. Everything was completely fine. We're still bullish, trending at all-time high. So I followed that as a whole. But my thesis was incorrect. So we got blue past this level. Yes, maybe now we're going to come back up and we're going to seek higher prices from the buyers and aim for this area up here. And if that's the case, then that's the case, right? But as a trader who wants to preserve capital and trade with integrity, you got to be careful with what you trade and how you trade and, just preserve, really, because, you take a loss. I could have very easily just got back in and blew my account, So it's important to kind of step back when you lose. You think about what you did wrong, and then you just take the rest of the day off. Close the computer, do what you got to do. I'm not going to close it. I still got shit to do, but you take the necessary parameters to make sure that you do not take another position again. Obviously, if you're that confident with a position and you really think it's going to play out, then fine. But I have my rules, and that's not part of my rules. So this is the basic context, right? So how can we deem our OTE valid? Okay, in terms of candlesticks, I look for imbalances which align with order blocks, right? Imbalance, 3 candle pattern, gap left behind in the middle, right? Order block, the move, which price goes just before it wants to go in this given direction. Okay, so I've marked them out here. It's the order block, it's the fair value gap. I always, even though I'm using order flow, I still intertwine these things with my strategy because, I don't know, it just works in my personal opinion, right? So as you can see, we validate the move by the order block here and the fair value gap here, this little gap here, okay? So once we do that, we set our fib, we have our golden zone between these ranges, price comes down, you get a bit of a correction. Just to note, I would typically put my stop loss, say the 0.88 is here, to have it on the chart in this scenario, right? And I'll have my stop loss maybe here, just to allow for a bit more risk to reward. Because typically, if you're more than the C of the 0.88 to the 1, normally, I'd say 80%, 85% of the time, if you come down here and you go further than this, your thesis is valid and the chances are you're going to get stopped out. So that's the idea with that. Okay, so in terms of taking your entry, as I've just said, you have your aligning confluences, your conditions, your narrative, your context. Then you can anchor it from here to here. You wait for price to come down into your area. You set your limit order here. And in this scenario, first target is this high. Take your continuation. You can say we sweep the highs, we rebalance. If anything, we have a change of character here. So you could come back down here. There would be another fib level here, and you can catch the continuation again. Just constantly rebalancing the market is pretty much just what's going on. Buyers are in the most discounted possible range to take the price higher. Sellers don't want to interact in this area, so buyers can win the auction and push the price higher. Okay, now knowing this, what can we do about further targets? Okay, that's when we intertwine OT and standard deviation. Okay, standard deviation is pretty much the measurement of how price moves away from an average price. Okay, so it's the same thing as the fib we use for OTE, and it's the most discounted range that buyers want to buy at. It's the same with standard deviation. So the levels we look at are -2 to -2.5 and -4 to -5, right? So -2 to -2.5 is the typical reversal range. Okay, so you'll see at many areas, as long as you've anchored your Fibonacci right, that price will reverse at these ranges. You'll go to -4 and -5, which is deemed the maximum expansion of the move. Okay. So how do we plot it? We can anchor our standard deviation from the manipulation leg. that either change the character of the market or the break of structure or market structure shift. Okay, so as you see here, anchor it from this leg to this leg here, and if we have some broader context on this and we piece them together, we know the levels we want to look for our standard deviation. We set -2 to -2.5. Okay. Now we know this, we can now pair it together with our standard deviation and our OTE. And we need to align these with historical areas of interest. Okay, so as you can see in this example, let's just outline this. We have a high, we have a fair value gap. When we draw it from the manipulation leg here, okay, we can see the levels in which price seeks. Okay, and what happens? Price goes up, we hit these levels perfectly. Okay, and this does play out to -4. Imagine -4's up here, price does go up after I did see for max expansion. Okay, and as you can see, same thing down here. My stops are at the CE of 0.88 and 0.1. 0.88 is here. It is a 7.5 R trade. So if you risk 50, you'll make 400 on this trade per se. Okay, good. So that's OT and standard deviation just pieced together. I'm keeping this brief. If you don't know the basics of trading, I'm not going to be the person that's going to get you in on that. If you have the basic knowledge, then you can use this strategy and kind of take it further. Okay. So in a quick summary, we're going to plot the fib from the OTE of the previous swing high to low. So if price is going up, it's going to be from the high to the low. So we can do it from here to here, and this will be our OTE zone. And if we're looking for sells and we're looking to short the market, look like this. Plot it from the high to the low, and you'll see the reversal range in this area here. Okay, so this is the basics of OTE and standard deviation. And as always, you know, it's easier to say this than to actually do it. Okay, I've had practice doing this a lot. And next time I come on here, we're going to talk about order flow as well. Okay, and I will show you examples pretty much of executions of saying about order flow right now. But I don't want to provide you with misinformation. I want to make sure I know everything that I can about this before displaying it and giving the wrong information, frankly. Okay, but these things I'm confident with, and I've used these for a very long time. Also, just a quick side note, I do not tend to plot my fib leg in the same area which I do my standard deviation leg. I don't know if you noticed that when I was actually on the charts, but that is a very good point, because I did specify it was the same leg, and it's not. Sometimes I do, but most of the time it's not the same area. So I hope you found this useful. We're going to be keeping these uploads going every day, even if there's no trades. Obviously, I give you a very quick trade recap. I don't want to bore you with a short loss. We'll do proper trade recaps from tomorrow. Just wanted to get the ball rolling in terms of content in general, and we'll be grinding out, doing as much as we can.